Well, welcome back. I'm here with Brian Shannon. Brian, you may know and follow on Twitter at Alpha Trends. And you can also follow Brian on his blog at www.alphatrends.net. Welcome, Brian. Thanks for coming on the show. I appreciate your time.
Thanks, Matt. Good to be here.
Yeah, good. So you're in Denver. I'm on the West Coast. We're both on the Western time zones, which I can say after trading on the East Coast time zone is the best way to trade. Have you always traded in the Denver area?
You know, my full-time trading pretty much has been in the Denver area, but I moved out here in 94. So I was involved as a retail broker on the East Coast. Did a year with Dane Bosworth here as well, from the 9:30 to 4 o'clock. 7:30 to 2 p.m. here.
Right.
And man, it's a great schedule, isn't it?
It is a great schedule. I mean, here in Oregon, I was on the East Coast for probably the first 10, 11 years I traded, and really for me, I hated the process. I always was getting up at 5:30 anyways. And basically, I got used to working out in the morning and all of that, and I missed that. But trading didn't start until, markets didn't open until 9:30, so 8 o'clock pre-market. And really back at that time, in the late, early 90s, mid-90s, there wasn't a lot of pre-market activity anyway. So there was a lot of waiting around. And the West Coast definitely suits my personality. Done here at 1 o'clock. You can do your research, still go home, play golf, work out, have your fun, which I think is...
got some sunlight for those workouts, which is nice.
The balance, exactly.
Yeah.
So, you definitely have an East Coast accent. Where'd you grow up?
North of Boston, Andover, basically, for a while I was there.
Did you go to school at Andover?
I went, not to the Andover school. I wasn't one of those kids, but I went to their public schools till I guess 9th grade, and then I got shipped off to private school after some problems.
So there's a precedent for what you have going on with the teenagers right now.
For what we were talking about before, yeah, unfortunately, it makes it easier to understand in a way, but teens can be difficult, and it wasn't an exception with me.
Yeah. So did you end up going to college on the East Coast?
I did. I went to University of Hartford my freshman year, and that didn't go so well. And then I finished off in North Andover, the local school, Merrimack College, which was it's a decent school. It's Division II, whatever.
Right.
Sometimes they have a football team. Usually they don't. Depends on budget, but good hockey program in that.
Were you a hockey player?
But I wasn't a hockey player. I brought that up because I know you are a hockey fan and maybe a player, I think.
Yeah, I'm a very average C player, but I enjoy playing. I like playing with guys who are hacks like me. I don't play with the good players. I play with the guys who run into each other. So yeah, but I enjoy it. It's a good sport. What did you study? Undergrad.
Business management.
Okay. And right out of school, did you go right to work in the retail brokerage business? Right out of school?
I did. I got a job with a little company called Thomas James, and they were basically a penny stock chop shop. I didn't realize it at the time. It was my foot in the door, but they were doing all these little unit deals with crazy little names. Warrants, right? So warrants, 2 shares of, a share of common plus 2 warrants, and the penalty bid. You couldn't sell it, but someone was, and I mean, it's really like the movie.
You could sell it to retail schmucks like me. That's how I got my teeth bashed in. Was and how I figured, my way through the markets was I had friends that were brokers, not necessarily for chop shops, but with my limited $10,000 that I had saved, after college. I put it into these $5 stocks, buy 1,000 shares, and watch it go to zero over and over again. So you probably had a handful of those that you had some experience in.
Well, the good deal was that I wasn't there very long. A couple of friends of mine had some connect. I met some other brokers on the street, and that was in Boston. And then I went over to Lehman Brothers, and so I was only with Thomas James for a couple months, and I got to see the shady side of things, the boiler room. Really, I look back at that movie and just those were the lines. Those were almost the stocks. I think they researched it and, let's rhyme it with this disaster story.
Yeah.
But I went to Lehman Brothers, and I learned how to sell. So fortunately, I didn't get to do a lot of damage to good
Your
retail,
reputation.
innocent people because I didn't know how to sell. But Lehman taught me that, so that was a great experience, though. I mean, it was fun looking back on it.
Now let me go back before, let's just touch a little bit because there's a common theme I always want to find. Were you interested in the markets, even before you went to college? Was it
I was,
something?
yeah.
What was it about it, and when do you first remember getting interested in markets?
I really was first interested. I mean, at Friday nights my dad always used to sit around and watch Wall Street Week, and I would just want to be in the room and hang out with him. So I think probably from the age of 10 to, or 8, even 8 maybe,
right,
to 12, 13, I would kind of be in the room with him. I'd pick up on a little bit of the stuff, but I really didn't understand what it was all about. And then, being in the Boston area, I've told this story before, it's a company called LoJack. They're still around.
Right.
But they were just starting out in probably the late 80s. And they, had the tracking unit. They had the unit, but the question was how were they going to, track the stolen cars? So they donated the tracking units to the state police. And I'd seen something on television, and the state cops, there was actually an investigation after, but they bought a bunch of stock based on that. And I said, hey, Dad, would that make sense? I think I was maybe 15 because I had some jobs, saved a little bit of money. Anyways, he said, yeah, we'll buy some. And it was, we bought 1,000 shares. I put up $500. The stock was $4. And about 4 to 6 months later, we sold it at 10.
Wow.
And I was thinking, this is fantastic. I mean, right there, that was the needle in the arm, and I've been obsessed, not since then, but, when I went over to Lehman Brothers, that's when I first kind of started looking at charts.
Yeah.
And that's where it made more sense to me. I mean, I like looking at the pictures of rather than reading the articles. I'm a picture guy.
Me too. That's definitely what, like I said, I was buying stocks blindly, on these fundamental pitches and really didn't know my, ass from my head, obviously, and that was my first experience also, so very similar. As a kid growing up, like you said, you got that. Was your dad an investor, or was he just interested in the markets, something he looked at, so he was able to give you some insight there?
He was an investor, and he was, he worked with his broker. He was just a retail guy who did have success with it. I think he had a good nose for it generally, but he's always had success. He's actually traded the metals real well his whole life, and he's done other good real estate deals and that sort of thing. So.
So you had a little speculation, bug in the family. Then you had some, like you said, you had some understanding of that from a young age.
Right.
You saw your father.
Right. He had success with some OEX options along 20-something years, 25 years ago.
Right.
And I remember him explaining them to me, and then I read a book about it. And I went to the library, and I would sit there and take out all these old Dow Jones newspapers from Friday option. I'd get the Wednesday, Thursday, Friday, and I thought they were real prices, but some of these options didn't trade for 3 days. I didn't realize that, but my dream was, I thought I had it all figured out, that it was going to be, I would have this boat and the car and the vanity plates. It would be called the OEX because, man, I had it figured out, but until I tried it, and then I guess I didn't.
So you ventured into OEX options fairly young. I mean, before after your foray into LoJack. I mean, did you step into it that early?
It was after college, really, that I got serious, and I needed some time to grow up, I think. But right?
How about what else were you? What kind of youngster were you? You were playing a lot of sports. I mean, were you competitive? Did you play a lot of games? What drove you as a kid?
Yeah, I'm a pretty competitive person. It was not so much games, family games and that sort of thing, but more of an individual sports. What I really got confidence from early on was sports. And I used to be a fairly decent runner, and then kind of lost track of that somehow. But I got into swimming and had some pretty decent success with that. So that really kept me, kind of gave me a good, or maybe instilled a good work ethic, waking up and swimming for an hour and a half before going to school. And, I would bet kids that I was racing against, hey, I'm gonna beat you, and I'd always win too.
Yeah,
So,
so you weren't afraid. You weren't afraid to put your money on the line with your talents, which, I think is always the best way for any business person to, make their medal. I mean, it's, I was talking to somebody just yesterday when I was at school in Ann Arbor. There was, I worked at a sorority for food. We'd bust tables and wash dishes and
for food
and get dates, of course. But we got the free food. And there was half the guys were, fraternity guys, and the other half were on the swim team at Michigan. And these guys were just monsters. I mean, they were amazing. I was talking about, these guys are true student athletes. Granted, Michigan's top 5 swim program every year. These guys were just amazing. I mean, they'd swim 2 to 3 hours in the morning. They'd go to class basically from 10 until 2, and then they'd swim, from 3 until 6. And then they'd do some homework, and they'd go out and party like no other. I mean, these guys were rock stars. I mean, they were unbelievable. And they had the perfect bodies. They were good looking, and but like you said, I mean, I think there's something about athletics, and it doesn't matter what your flavor, that really, and I try to instill that in my kids. I mean, if you're going to play something, I encourage them to try everything, whatever it is they like, stick with it. But whatever you start, I also try to, and I think this, again, you want to teach this and lend this to your kids, that whatever you start in life, try to finish. Right. At least for a season or whatever.
For the season, exactly. Yeah.
You make the commitment, you start and at least finish the season, and that's hard, I think, but it carries over into school, it carries over into any business endeavors and business, and it's okay to fail, and also to allow your children to fail. And I think some of the things we do as a society now really prevent, or parents try to get in there and meddle and try to eliminate that falling down, if you will. And I don't know about you, but I fell down a lot as a kid. I was getting stitches, banged up, and I don't know. So I've got 4 kids, so I can let it kind of get a little crazier because I can't watch them all the time. But you just can't protect them all the time.
Yeah, mine are 2 boys, and I'm a big believer in the boys will be boys. But be smart about it. Don't do things that are going to hurt other people. Respect, and like you said, stick with things that are positive, and try these different activities, and something's going to stick. And when it does, then work as hard as you can at it. My younger son's really, latched on to karate. It's really cool to see him do that. He just went over to China this summer. In fact, he's so into it. So
that's awesome.
Yeah, if they have that discipline and that hard work, and they can start seeing results. And karate's a good one because it's so goal oriented. It's one belt after another, and you have that eye on the prize. It's the black belt that they're all going for, and and then you don't quit there, of course. But that's just a nice goal to have.
Well, let me ask you. One of the things I would say about you, Brian, is that, and this leads into it, you're very consistent in your methods, and obviously you didn't get there overnight. So why don't you tell me a little bit about how you got to where you became a picture guy, a chart guy, a technical analysis. I've traded everything in my life. I traded stocks primarily for the first 12, 13, 14 years, just like you still do. So I can talk your game very well. Would you categorize yourself now as strictly a day trader? Do you swing trade? How do you do your discipline, and how do you set up your day?
I look for swing trades is my goal, and I look for something that is ready to go, and based on the charts that I think might go for 2 to 3 days. In other words, there's a nice move coming, a breakout or a breakdown, and I get into those, and I look for the swing trade setup, but a lot of times I end up day trading them because it doesn't follow through. In this market, the last couple of weeks especially, I mean, we're just all over the place. Nothing's following through. So it taught me to become very conservative, to take at least a little bit of the profits very quickly. Right. And then when you do catch a nice breakout trade, to try and scale out and hold back a little bit and hold some. Someone had just sent me the link on YouTube yesterday or 2 days ago to John Paul, what's his name? Paul Tudor Jones, rather. Yeah. Paul Tudor Jones. Yeah. In old videos he did in '86, right. And he was long at the end of the day, and they were really rallying. He's just kind of like, sitting on his hands. I can't, I want to sell so bad, but I know I shouldn't. I got to do anything not to sell. Right. And it's a great reminder that when you have a good position on, and someone, a trader that I respected and traded alongside with a while back, told me, he says, Brian, when you get that feeling, buy more. Yeah, buy more, And I don't always do it, and sometimes I do it. I don't tweet it and that sort of thing. I just, the whole Twitter thing, I look at it, and some people will still just blindly follow, and they're using the tool improperly in that regard, and it scares me a little bit. Yeah,
I agree with you in that respect. I mean, I think, you and I talked off camera a little bit before. I mean, part of me wanting to do this interview series was I always loved the Market Wizard books. I love the stories. I love the psychological battles and the scars more than the techniques. And to me, the game is all about psychology, and it's about your mettle and testing it. Like you said, the hardest thing to do as a trader sometimes is to, one, add to a winner, or I could say add to a loser if that's part of your buying in or selling up to, and I have different beliefs and philosophies there. And I think the other difficult thing to do is to not trade and be patient and wait. And you were asking me earlier how I got my name, Mistrade, or how I came up with that, and that's really two-factor. I worked for a firm out of Chicago, Peak Six, run by a friend of mine from Michigan, and one of the best traders I ever knew was, still runs that firm. She's still the CEO, and she's an amazing, patient, competitive person. But I think women, and you don't see a lot of women doing what we do, but I think women would probably make better traders because they have less of that, again, 3 letters, that ego. So I want to trade. I want to trade more like I always say my wife or this particular woman traded. And the other thing is
like a chick.
Exactly, I do. Because you know what? There's say what you will, but they are smarter and more logical when it comes to financial decision making than men. At least
you know what? I agree. I'm totally with you, and I say that with all respect when I say trade like a chick. It's not So the miss means.
And then the second part, the second part of that handle is that I miss trades every single day, and you got to get over that. You can't look back and say but next time when you see that setup, take it. Or, learn to act on it. And so a lot of that is, again, you can every day. We can look at the trades that we missed.
Should have done this, right? Exactly. I mean, you got to get over that, or you drive yourself nuts.
Or, as you said, I bought it, sold it for 50 cents, and it went up $2.50 after that. I didn't hold any of it. So the hardest thing is to miss the profits, even if we are in the trade and we get out too early. But I'm more like you. I'm more conservative. I'm more inclined to wait and be patient. For the trade, and when it comes, I'll start taking. I leg out just as I leg in, and so I'm in agreement with you there, and because things can turn so quickly, and so it's interesting that you say that because I think it's there's breakout markets and there's going nowhere markets, and like you said, the last few weeks we're definitely been into one of these fader markets where you fade the top, you fade the bottom, and at the end you're both you're making money on both sides. So.
And today it sounds like, from what you said, I mean, you just kind of sat on your hands most of the day, which you look at the chart, I mean, it was basically flatline. We had a blip in the morning, a blip in the afternoon, and some of the stocks were moving, so maybe I ought to look at some of those once in a while too.
I try to, because I do trade stocks still. Again, I ran a hedge fund. I worked for 2 hedge funds, so I've done that. And again, I'm curious when you tell us a little bit about tell me a little bit about how you set up your day. Like, what's your process? I know after we get off this call, I'm sure you're going to go look at some charts and flip through charts and numbers of charts. Tell me what you do. Tell me what you do the night before. Tell me what you do the morning of, and how you deal with the day. You have to have a regiment, obviously, every day to be successful.
Yeah, it's pretty much it's pretty much the same every day. It's some people might look at it as boring, but it's, I guess, meticulous. It's planned out. It's kind of the same. So
But let me say, it should be boring. Trading, I say this every time to people. If you want to trade successfully, it better be boring. If it's not, go to Vegas.
Yeah, there's some exciting moments in between, no doubt.
Last fall was
absolutely.
Fun. Last fall was fun, but we're back to normal now.
It can be boring, and that's something about stock twits and this whole community thing. It's it kind of takes away or adds to the value when you're especially if you're not in an office with a group of guys or women who are trading. It brings that whole kind of community together, which is obviously what it's supposed to do. But back to your question, the real work probably begins usually Saturday morning if I'm not doing something early. So on Saturday morning I'll usually get up. I'll be at my computer maybe 6 o'clock, and I just make a commitment. I'm not going to turn on Twitter. I'm not going to look at email. I'm not going to do anything because otherwise I'll be there till noon. So I turn on my computers and I look at a list of what I call kind of my master scan. And there's about 700 stocks on there. And I take some off, I put some back on. But I have 3 screens. I have a 30-minute chart on the left, a daily in the middle, and then a weekly on the right.
Okay.
So I've got the macro picture, I've got the daily, and I've got a little bit of intraday. And I go through those 700 stocks, and maybe, first pass through I'll go through, and it'll take me 2 hours. So it's actually pretty quick, I think. So I'm just kind of thumbing through. I slow down when I see something interesting. What I'm trying to see is what could potentially happen during the next 5 trading days that might get me interested in this stock.
Right.
So it's not necessarily just for Monday, of course. Okay, so I'll get my list of 700 at that point down to maybe 150.
Right.
And I call that my scan for the week list. So I'll work down through that, and that might take me 45 minutes or an hour.
Right.
And I'll get my list together for the next day, which will be 30 stocks or so. And then I'll look at those 30 stocks and say, these are the ones, these 3 or 4 are the ones that really are kind of the A list of stocks. These are the ones that I'm going to give, put out to subscribers. These are the cherry picked ones.
Right.
And then I'm going to take another 5 or 6 of, the 30 stocks and, tell subscriber, here, look at these ones tomorrow as well. I'm not sure what the trigger is yet. It's not fully developed, but maybe midday something could happen. So a lot of anticipatory analysis.
Right.
Anticipate the action, but wait for price confirmation before you participate is the way I like to say it.
So what do you have on your charts? What's a basic? I'm sure all your time frames have the same things. What's the most important things on your charts? I have. For me, it's price, volume, moving averages, and a simple RSI stochastic type thing. That's it.
Yeah, same thing except no RSI or stochastic. It's price, volume, moving averages, and people know I use the VWAP a lot, but it's another moving average. It's just volume weighted rather than time weighted. So that's it. It's price, volume, and moving averages, and there's a lot of other great tools. I still look at them from time to time when I see an article. It might pique my interest, but it always comes back to, the price action and just, drilling down to shorter and shorter term time frames to really get it. You never do all the time, but there's some moments where you just nail it, where you force the breakout almost, where you say, all right, people are waiting here. I know it. Let's see if I can make a move.
Right.
And, so that's fun to do. And, as soon as they get going, I try to sell a little piece out. And I always tell subscribers, hey, listen, anticipate, get in there early. Here's the trigger that everyone's looking at.
Right.
If it looks like on the tape, start using your skills as a tape reader and looking at the flow and how fast the market's moving. Is the advanced decline line strong? Stocks breaking out all over the place like Amazon and Apple and,
right.
Alcoa after hours and stuff.
Do you tend to trade? A certain market cap? I mean, 700 is pretty broad. I can tell you, I used to trade maybe 300, 500 somewhere in there. I'd start with a little bit smaller list maybe than you're starting with. So you're probably trading some smaller caps maybe than I was used to or comfortable with. Do you?
Yeah,
go ahead. I'm sorry. Average volume an important thing for you also with the name?
Average volume is very important. I usually will not mention a stock unless it trades at least 500,000 shares.
Good.
Today I made an exception because it was a great breakout in a stock, VISN.
Okay.
And I said on Twitter, listen, I just bought this thing. Be careful with it. Average daily volume is only 400,000 shares.
Right.
The stock ran like 10% or so it was a real nice move, but I was hesitant to mention it. I trade some of the the little biotech stocks, but on the $2, $3 stocks, they're crazy stocks that are going. They're trading 1 million to 2 million shares a day, so they got maybe tiny market caps, but a lot of people seem to be gravitating towards them, and you look at these things going 20, 30% in a day. I mean, it's I can't resist. That's my candy store.
And so when you get I look at a market now that's had a huge run. I'm not sure when I'm going to air this, but we're talking here early October. We've run up 60% in the market. Do you find that you're I always find in these cycles that the big caps have already had their run, the medium caps, even the small caps. So now your refining list is getting down into these smaller names, as you said. The volume's there. So as long as the volume's there, I have no problem with people playing those. But I think, we always need to explain to people that, volume goes away. You don't want to be stuck holding these things.
Yeah,
they're playing
It's the Roach Motel, easy to get in, but if you need to get out,
Yep.
It's not going to happen. Not on your terms.
Yeah, as my friend Jesse Felder's father wrote, you can check in, but you can never, you can check in, but you can never leave the Hotel California. So
yeah, exactly.
Yeah, it's so volume is important. Market cap not so important, but you're not playing stocks that are illiquid. You're not trying to obviously. Figure out, because that's in my opinion, it's a fool's game.
Right. Well, you know what? And I think you realize it's the fool's game the same way that I know because you've been the fool before, and you just say, forget it. It's just not worth it.
Yeah. I mean, you're going to lose money playing illiquid things, and that's the other reason why I always played liquid stocks. And, that's why I love the futures because they're totally liquid and, I can count on, players playing by the rules, so to speak. And that's very important.
I price wise though, I do tend to gravitate towards probably, 40 and under. Really, I'm not as, I traded RIM successfully today, but I normally won't trade that stock. I'm not good with a $200 stock.
Okay.
It's kind of an interesting.
Even with millions of shares trading, you're not interested in Google and these types of names.
They seem to trade actually on the chart a little bit more randomly to me because it just seems as though there'll just be some institution that comes in for whatever reason and just drills the stock. Maybe there's just too many games in there. But some of the smaller, the $10, $20 stocks seem to trade a little bit truer, a little bit more honest on the chart. That when you get a breakout, a lot of times it's going to hold a little bit better.
Right.
It seems like Apple, you have to buy it on the pullbacks, and that's just against what I do. I hate it. It's just as soon as I buy, I'm down, and I feel like a fool. So
yeah, I hear you.
If it's not moving quick, in my direction, then I get bored real easy. I start, looking over my shoulder and selling half of it out. And
would you consider what you do more of a breakout style versus pullback style trend following?
It's actually a combination. So what I call it is, alignment of trend on multiple time frames. So I'm looking for an established trend on let's say a daily time frame. And then I reference the weekly because I want to say, what's the bigger potential here as well, just generally. So I look at, let's say we're in an uptrend now, so I'm looking at stocks in uptrends, and I like to see the pullbacks on the daily time frame. So then I'll drill down on the 30-minute time frame, the 10-minute time frame, going back maybe 30 days and then 10 days on a 10-minute time frame, and look for that pullback has kind of undergone. It's kind of run its course. The series of lower highs and lower lows might have run 3-4 days. Now it's gone sideways a little bit, and now we see a breakout level of the last day and a half to 2 days on a 10-minute time frame. So I'm buying a breakout on the short-term trend as it becomes in alignment with the uptrend on the daily time frame. That's
Yeah, and again, I was just explaining this to my members today. It doesn't matter what you trade. I mean, I think this is a key point. Again, weekly not so important to a day trader, but you want to know, hey, price line's still in the downtrend from a weekly or monthly chart, but on a daily chart it's up. So probably from most of your charts you want to buy price line, or you want to buy RIM, or you want to buy Apple. They're all in uptrends, but on the bigger picture, most of them are really not in an uptrend. But then you keep breaking it down, like you said. Maybe it's 120, 60-minute. You find that time frame and contextualize that whole series of charts that really gets you to that picture, as you said, that's going to become more effective. I mean, I can tell you, just I'm sure as you can, stocks that you're involved with right now. You've looked at the charts so much on all those different time frames that hey, at daily, here's my range. A 60-minute is within that daily. The 30-minute is within the 60-minute, and the 5-minute is within the 30-minute. There's all these different layers, and I know where the vacuums are, between up and down prices that are going to take, like you said, make those fast money trades, and that's really, I think, where I think people struggle the most. Wouldn't you agree?
Yeah, it's like a scientist who looks through his microscope. You have something in your hand, you don't really see much detail. You put it on 10 times magnification, 20, 50, 100, and then you have that aha. That's what I've been looking for. There's the trigger. It wasn't. You can't day trade looking at the old swing trade thing that was popular 10 years ago was a 3-day pullback, buy above the previous day's high with a stop below the previous day's low. Well, that's a $2 range maybe. If you look at a 10-minute time frame, you can minimize your risk down to maybe 30 cents, 40 cents. There's no reason to risk all those, nice little higher lows that developed on the 10-minute time frame as it was hammering away at that short-term resistance.
Exactly.
You can really, it just helps that precision. And then you have to really say, well, what am I looking for? People don't define themselves by a time frame, and they'll start to justify things. Well, I'll give it down to this level instead.
Right.
It looks like there's a bigger level of support there, so I'll just stay. Not just
trade
first
becomes
one
an investment.
gone.
Yeah, the worst thing ever. Yeah. So let me ask you a couple more quick questions, and I'll let you go today. I appreciate your time.
Sure.
What do you think makes you most successful?
I'm extremely defensive. I'm cynical, I guess, of anything I read in the news. I'm always looking over my shoulder, thinking they're coming to take my money out of my wallet.
They are.
I'm distrusting of the market.
So you're like most traders. You hate to try to take money from it every day. You don't. I mean, and hate's a strong word. I just mean you distrust it, because I distrust it also. I think most traders do. They've seen so many strange things after doing this. You've done it almost 20 years. I've done it not quite that long, but yeah, I think you have to develop that shield up there to maintain. I mean, you've been doing it for a long time.
I've got in my office. I've got some stock certificates I bought on eBay for. I've got a General Motors one. I've got an Enron. I've got WorldCom, and I just look at those and just kind of, I didn't write it on everything, but it's just, don't fall in love with the story here because, look at the disasters and people bought into that. I was looking for a Bear Stearns,
certificate. Yeah.
And a Lehman certificate, and I said to the clearing firm, I said, listen, I want to buy 10 shares and 100 shares and take delivery. And they said, well, the clearing agent changed it because everyone's doing this now and they're charging like $400 for a certificate or something like that.
So it became like playing cards. It's like they basically whore the market out and make it not worth anything anymore. Literally.
Yeah, it's an interesting little piece of history, really.
Yeah. But that's it.
Geeky stuff you hang on your wall when you're addicted to charts and the market.
Yeah, and the one I have that probably caused the most pain for me was Krispy Kreme, trying to short that thing, and 99, 2000, fighting that trend. So
Krispy Kreme, Snapple, Crocs. I mean, you look at all the
trendy stocks.
And that they're one day going to make a fantastic short. Taser. There's been so many of them. I mean, and now we know when we see them, it's like, right, we'll just get on until it reverses. And that first big gap down is always what kills them. That's what crushed Crocs. There was one gap down of 20 points and game over.
Yep.
It just ends just as abruptly.
Well, again, you play both sides of the market as well as anybody, Brian. I appreciate you coming on the Mistrade Missives. Look forward to having you on again, as always. Follow you on StockTwits, alphatrends.net. Pick up your book. It's a great book, Technical Analysis by Brian Shannon. I know you didn't want to really promote it, but it is good stuff. And, you're right up there with the, in my opinion, with the masters and what they do and how they look at the market. So, thanks again for coming out.
I'd say the same for you, and thank you for, you do a great job on these interviews, too. You have a nice way of always making it conversational with everyone, so
well, thank you.
Good job with that as well.
I appreciate that. Thanks, Brian.
Okay, thanks.